Hey team, what's up? So excited here for Masterclass number 1, where I'm going to teach you the most amazing strategy ever. It's going to be a strategy that I taught 11 newbie traders, and they used that strategy to make $12,000 in their first 30 days. You heard that right. And before I show you how this amazing strategy works, what it is, and how to trade it step by step, so that by the end of this video, I guarantee you'll be able to structure the trade, put on the trade, know how to manage the trade, everything about the strategy you will know so that you can use it to start making money today. You won't need any other things but a broker, a trading account, and all the knowledge you'll find on this download link below this video. So let's dive into it. And before we get started, let me prove to you that this strategy works. So Tom King is the original guy who popularized this trading strategy. So again, I'm not taking credit for it. Also, he didn't invent it either. It's been around for a while, but he's the one who made it famous. So Tom King makes $15,000 per month trading the strategy. If you want to go see that, you can go see it on his YouTube channel. Joseph Puckett, on the other hand, is also a YouTuber and options trader, and he uses the 1-1-2 strategy that I'm about to teach you to make $100,000 per month. That's right, $100,000 per month. Who here would like to turn their annual income into their monthly income? And guys, it's all based on account size. So obviously he has a larger account size, but this shows you the power of this strategy as you grow and your account gets bigger and bigger and bigger. I have Neil here, who is one of my auto trader beta testers, who used this same strategy to make $800 in his first 30 days. That's right. He didn't really know much about the strategy, but he used it to be able to make $800. Who here would like to make $800 in the next month? That's an extra what? That could be your mortgage payment. Actually, maybe not that anymore, since we're after 2020, prices have gone crazy. Anyways, that could be like what? A car note. That could be groceries. That could be insurance. That could be things like that that could really help you, right? And so that's how amazing bringing in extra income from trading is. Ryan, who also has a bit of a larger account, has used this same 1-1-2 strategy. He was new to it and made $3,500 in roughly his first 30 days, a bit over that, but still $3,500. Who here would like to make an extra $3,000 a month, right? That could definitely cover a mortgage payment. All right, Keith here has made over $200 since joining. David has made a little over $1,000 in a little over a month, so a little over 30 days he made $1,000. Who here would like to make $1,000 in roughly a month? That's how amazing this is, and he's also doing it on the auto trader, so it's automated for him. But again, I will teach you how to do it without the auto trader. And then there's me. In the last 30 days, I placed 3 trades, making $2,950 using $11,000. This is a 27% return on my money from trading these 1-1-2. So now that you know and have seen that this can work for people with larger account sizes, not enough, or I should just say, read it here, right? If you've now seen that this works for every type of trader, new traders, experienced traders, traders with a lot of money, traders with less money, traders who have time to watch the market 24/7, and traders who are using an auto trader and have been making money while on vacation. That's right. One of my auto traders, like Austin, I've been gone in Cabo, and the 1-1-2 strategy has been automated for me, and I've made $680 over the last 2 weeks since I've been gone. So that's amazing. Okay, so put your hands up in the air. Are you ready to learn the strategy and learn exactly how it works? Well, I'm excited to teach it to you today. I'm going to put this here. All right, so this is called the 1-1-2 strategy, which you probably heard me refer to it before. Now, what exactly does 1-1-2 mean, and why is it called that? It's called that because it's actually 2 trades in one. So we have on a put debit spread, and a put debit spread is made up of 1 long put and 1 short put. So there we have the 1-1. Then we have naked puts. We have 2 short puts. And so since we have the 1 long, the 1 short, creating the put debit spread, and the 2 short puts, this combined is 1-1-2, or the 1-1-2 trading strategy. So the 1-1 is the put debit spread, and the 2 is the short naked puts. Now, what does combining a put debit spread and 2 naked puts do? It creates a strategy that makes money in virtually every market. That's right. In bullish markets, you can make $700 to $1,000 in as little as 2 weeks. In a neutral market, you can make $700 to $1,000 in as little as a month, about 4 weeks. And bearish markets, you can actually make triple what you typically make, $3,000 to $4,000, but it takes about 8 weeks or 2 months, right? Now, if the market were to crash, we're talking a 10% crash or more in a day or two, you could lose up to $3,000 to $4,000 on a single trade. Now, again, all these numbers and profit reports are based on trading the 1-1-2 strategy on ES, and that requires $8,000 of buying power per trade, but we'll be talking about that and how to do it for smaller accounts here soon. Also, in Masterclass number 2, coming up on April 8th, I believe, next Monday, I will show you how to turn the 112 trades into hedges and how many hedges you need to have on for the number 112s you have on so that you can not only survive a market crash, but actually profit from it. So stay tuned for Masterclass number 2. Now, how does the 112 strategy make money in every market outside of crashes? Well, the put debit spread that we're putting on, the 1-1 part of the 112, is a bearish trade, meaning it makes money as the market drops. The 2 part of the 112 are our naked puts, and that's a bullish trade, meaning that it makes money as the market goes up. And it looks like this. Here's a put debit spread profit graph. And what do I mean by that? Well, we have a profit graph here, and this shows you how much money you will make at any given point in time. And so we see here a put debit spread profit graph has a defined loss amount, aka it flattens out. So now we know that we can only lose so much and we can only make so much. So the 1-1, these 2 options, buying a put and selling a put, make money to the downside. Okay, as we go to the left, the market makes more money. The naked puts here, on the other hand, do the opposite, right? We see here that we have unlimited risk or loss and defined profit. So you can see here it can go down to infinity, which doesn't really happen because we have a stop loss on it. But we have a defined profit amount that we can make. So now it shows us that, hey, we have a bullish trade that makes money as the market goes up, and we have a bearish trade that makes money as it goes down. However, this one outpowers this one, and so we get left with a 112 that looks like this. So when you combine these 2 profit graphs, our put debit spread with our naked puts, it looks like this and shows you that you can make money in almost every market. When we put on this trade, the stock is trading around here, which means that if the market stays neutral or goes higher, we're going to make a profit. If it goes down into this range, we're going to make an even larger profit, and if it goes below this, then we're going to start losing. The profit graph shows what the trade will return at expiration. That's a big caveat. A lot of people will see this profit graph and see all this green and be like, you're telling me no matter what the market does, I'll make money? Yes, at expiration. There's a lot of things that can happen while we are in the trade. And so again, that's before expiration, and that's shown through the orange line. This orange line right here shows our theoretical price. So again, this green is wherever the stock price lies at expiration day. This is the amount of money you'll make. However, while you're in the trade, that can change, and this orange line shows that. If the market were to drop, this orange line is going down, showing that our 112 is actually going to be losing money. Why? Because by default, a 112 is a bullish trade. So as the market drops, we lose money. As the market goes up, we make money. And so if it starts dropping, our 112 will start losing, which is why we have a stop loss on it. So if the market goes down, the 112 will start losing immediately since it's a bullish trade. That's why if the market is in a slow downtrend, you'll be safe and be able to make that max profit, that big green profit trap you saw right here if it goes down. But if the market crashes, then you will have to close the trade early due to it hitting your stop loss. So what are the actual rules of structuring this trade? How do we place a 112 trade? Well, I'm going to walk you through some general rules and what people on the internet and people who trade this do. And again, I can recommend these and show which one is recommended for each. But inside the parentheses next to these recommendations is how I actually trade it. So a 112, we want to put that on futures, and I'll explain why in a second. But we're going to trade ES, MES, CL, GC, CB. Now, why trade those? Because they're very liquid and they offer great returns based on the amount of money we have to put up. So ES and MES are both of the S&P 500. CL is crude oil, GC is gold, and ZB is bonds. So those are kind of the assets that we're looking at right now. Now, that's what we're going to trade. I personally trade ES as my main 112 trading strategy or asset. My duration, we're going to go 45 days to 120 days. Why this range? Well, because the amount of buying power we need to put up, the money we need to put on this trade is going to increase the closer to the expiration date we get. Why? Because it's riskier, and so there's more money you have to put up. And so 45 days will have a higher buying power, but you'll get to make money faster because there's less days in the trade. Versus 120 days, you'll have to put up less money, but it's going to take a lot longer for you to reach that profit. So I like the middle ground of that is 90, so I have to put up a decent amount of money, but not too much, not too little. And I also make money relatively quickly, not too fast like a 45, but not too slow like 120. So the 90 days is my mark. Put debit spread. This is the first part of the 112 trade. We buy the 25 delta and sell the 23 delta. You can change this and fluctuate it as you want. The wider the difference between the delta you pick, the more downside protection you have. But it also means the less profit you make to the upside. And again, I'll explain that here in a second a bit more. But I like to use the 25 delta long and the 23 delta short for my put debit spread. Naked puts. This is the base of the trade. This is what makes the trade bullish and gives us that profit all the way if the market goes up. So again, a 5 to 10 delta, naked puts are great. 5 delta means you have a 95% chance of this trade making money. 10% delta theoretically means you have a 90% chance of making money. So again, this trade is a very high win rate, the way that we trade it. I personally like a 7 delta. It's just a good number. I love 7. It's the whole number, God's number, right? And so I always stick with 7 delta for the reason of 7 days of creation. It's just, it doesn't really matter between 5, 6, 7, and 8, but I just like 7 for that reason. Anyway, so 7 delta is what I trade on my naked puts, giving me a theoretical win rate of 93%. So that's how I trade my naked puts. Now, how do I manage this trade? I have a stop loss. You can put it up between 200 to 400%. 200% is the number I'm using right now. This means that if I get in for a credit of $50, I'm going to exit when that credit then becomes $100. So that's how I'm trading that. Take profit is going to be 75 to 95%. Why does it start at 75%? Again, this is going to go into what I'm teaching in Masterclass number 2, which is hedging. You can close the trade at any percentage profit and make that profit if you close the entire trade. However, you can take 112s to convert them into hedges to protect your downside later and protect other 112 trades you have on. And so in order to do that efficiently and effectively, you want to make sure you have at least a 75% profit on that trade. Now, Tom King goes up to a 95% profit, then he closes the trade. I like to stay between 75 to 80% profit. If I can get around there, I know that I'm doing good. So that's what I'm watching here for that. Now, ES and MES should be the main assets that you trade for a 112. ES should be used if you're trading with an account size larger than 25,000. If you have an account size less than 25,000, use MES because it's a tenth of the price. So to put on a 112 trade for ES right now is about $8,000. To put on that same trade for MES, it's going to be only $800. Now it's also a tenth of the profit, but if you have a smaller account, it works just as fine. You should use CL, crude oil, GC, gold, and ZB bonds as complements and diversification once your account size grows past 25,000. Why do we only trade these on futures? Great question. Why don't we trade them on stocks and ETFs and everything? Also, this strategy is so great. It has a 95% win rate. Why don't we trade this on everything? The 112 strategy only works on futures because of span margin and early assignment risk. Span margin is is way more profitable than normal stock and portfolio margin. For instance, a normal stock and portfolio margin requires you to put up 50% of the money needed. So if the stock costs $100, you can put up 50 and they would allow you to buy the stock. But with span margin, it's even a fraction of that. Let's say it costs 100. Well, you could put up $1 and still enter the trade. So, for example, if we were to set up a 112 trade on SPY or any stock or ETF, then you would have to put up $9,000 to make $300. I just did this. This is a real example. That'd be a 3% return on your money. And again, it takes about a month for this trade to go through. It's about 3% return in the month. Obviously not bad. But while we do the same exact trade on ES, it would require $8,000, so less buying power, and it would generate a $1,000 return, not even if we hit the max trade scenario. You know that max trade where if it drops and it goes into the put debit spread category where we make more money? That's not even factoring in that. It's just a normal trade will make $1,000. It's a 12.5% return on our money. So outside of just the return, futures, well, okay, because obviously if we're basing it just on returns, futures are the best. Now, outside of just returns, futures don't have early assignment risk. That means that when we're trading in the stock world and we're trading options, if someone wants to execute their option early, they can. They can take the option from you if you're the option seller, and this mainly happens when you're in the money. So if you are trying to hold a 112 on a stock during a downtrend, your puts, specifically the puts in the put debit spread, will eventually be in the money. And once they are in the money, they are very likely to be called away from you. And once they do that, it will ruin your trade and not allow you to realize the max profit. So because of span margin and because of no early assignment risk, we should and we only do 112 trading on futures. Now, Did I forget to mention tax advantage? Not only is this strategy going to help you consistently make monthly income, but it will also help you pay less in taxes. Who here is down for that? Who here wants to make great money every single month, even if you have no experience, don't know what you're doing, just follow this simple game plan and pay less in taxes? That's how amazing this 1-1-2 strategy is. 11 newbie traders I taught this to, they made over $12,000 so far. And if you want to know how much money they put up to make that, we're talking about a 7% return. So basically in their first 30 to 45 days of learning and using the strategy, they made a 7% return. That's what most people make in an entire year. So that's how amazing this strategy is, with real accounts, real money, new people actually doing it. So that's why this is awesome. Now, futures are taxed under Section 1256. I'm not a tax expert, but you can go look this up. It's pretty common knowledge, which means you pay 60/40 as long-term and short-term tax. So if you're just trading on stocks, options, whatever, on normal things that aren't futures or not SPX, then you have to pay at the short-term tax rate, which is going to be what your working tax rate is. So if you make a certain amount of money and you pay the 23 to 35% tax rate, that's how much you have to pay on the profits you make for your trading. Now, when you trade futures, 60% of it will be taxed at long-term rates. And the long-term rates can be 0% for a while and a max of 12%. So now we're already lowering it dramatically. So let's look. Based on your ordinary tax rate, this shows you how much savings you have because what the actual blended rate is. So if you're at the 22% tax rate for 2023, with the 60/40 tax break, you'll actually only pay 17.8% in taxes. That's a 4.2% difference. Now, let's say you're at a 35% tax bracket for your working income. This is how much you would pay if you're trading options on stocks and ETFs and stuff like that. You'd have to pay 35%. But if you're trading futures, you only have to pay 23%. That's a 12% difference. If you make $100,000 that year, that's a $12,000 difference in taxes. That's how amazing this is. All right, guys? So, yeah, that's just why it's important to be trading futures and the 1-1-2 strategy with futures. Consistent, reliable, monthly income works even if you're new, have no experience, tax advantage, everything like that. Okay, how often should you put this trade on? You should put this trade on as many times as you can given the buying power you have. Okay, because of spam margin, it's best not to have more than 50% of your buying power in trades at a single time. So if you have a $100,000 account, for easy math, then you should have no more than $50,000 of your money in trades at one time. Why? Because spam margin is a special thing. It increases when risk increases. So if the market were to drop and risk were to increase, they would ask more buying power of you. And so if we have 50% of our buying power set aside for that scenario, then we'll be able to hold through a market downturn, make the max profit on our 1-1-2 without having to close any trades because we had money set aside to cover the rising costs or the rising amount of buying power needed due to spam margin. Now, the goal is to put on at least one of these trades a week if you can. MES requires $8,000 of buying power per trade. MES is $800 in buying power per trade. So those should show you based on your account size what you should be trading. I aim to put on one ES trade per week. I'll be moving to 2 times a week here soon. And I also use GC and CL to diversify my account in trades. Again, I'll be talking more about that in Masterclass 3 where I show you exactly how I trade. Now, if you want to size up, it's best to enter more times throughout the week instead of sizing up a single trade. So instead of doing one trade a week and sizing up that one trade each week, it's best to do it multiple days in that week so that you spread your risk across durations and across different time periods and strikes. But again, we'll talk more about protecting your account tomorrow in Masterclass number 2. Now, how do you manage the 1-1-2 trade manually? Well, you're going to check the market every single day. When the market is red or you have available buying power, enter the trade and determine which asset you will be trading. Structure the trade correctly, the naked puts, the put debit spread by selecting the durations, the deltas, and watching the volume. I don't know why this isn't showing. Okay, submit the trade as 2 separate orders. Since you can't submit it as one order to the broker, you have to do the put debit spread as one trade and the naked puts as another. You can't send them all together at the moment. Manage your positions every day. Watch every position for either a take profit or stop loss. This gets harder when you have multiple trades to manage, if you aka more than 10 trades. Turn trades into hedges when the market is at a high point or in a in a volatile market. And yes, if you mess this up, it could cost you a lot of money. So make sure you watch Masterclass number 2, where I show you how to properly convert these trades into hedges. And after you do all that, you've generated monthly income so that you can provide for your family. Actually, I wasn't planning on doing this, but let's pull up the broker here and let's walk through actually how to do this so that you know what's going on. So I'm going to follow how I trade a 112 and I'm going to set it up. All right, so I'm on ES Futures-ES. Again, if you're trading MES, do that there. I'm going to the closest one to 90 days, which is going to be this one, 85 days out, is closest to 90. I'm going to put on the put debit spread. That's going to be my 25. I'm going to buy the 25, sell the 23, just like that. This is a put debit spread. If you see here, as discussed earlier, oops, let me remove all these extra whatnots. As we discussed earlier, you can see here it gives me downside protection. I have a max loss and a max profit of about $1,000 profit to the downside. So that's what we're looking at there with this put debit spread. Buy the 25, sell the 23. Again, this is now 24. I'm actually going to bring this out to 22 to give me a bit more downside protection. Now I'm going to go out to the 7 delta and sell that. So 7 delta, I'm not only sell one, I'm going to sell 2, right? Because I sell 2 just like that. Now I have the 1, 1, 2. 1 put I bought, 1 put I sold, and 2 puts I sold. So that creates the 1, 1, 2 structure. Now, just like that, you can see here for this trade, I need to put up $6,000 for the trade to make $1,500. So let's go to the curve and look at this trade. Just like that, this is the normal structure. The put debit spread creates this. The short puts create this little upside profit. I put up roughly $7,000 and I get to make $1,500 or $1,475 around there. So this is how the trade is structured and created. If you see here, if I click review and send, it says this strategy is not supported. Try legging in. You can't submit it as one order. So what you'll have to do is you'll have to go in here to the table, get rid of this and do them separately. So enter the put debit spread as one trade, then go back and enter the other trade. So that is how you do it. Then you have to come in here and you have to monitor your trades, have to be like, okay, this is at this percentage profit. I'm going to close it. I'm going to turn it into a hedge and do all these things. And if you're a newbie trader and you just don't understand options, you're like, this is a lot going on here. I completely understand. It can get confusing, especially when this whole thing is filled with trades. And so it can get definitely confusing. So let me walk you through how you can do this with the auto trader. So now you might be saying this is awesome, but it seems like it takes a lot of work, time, and energy to manage these trades correctly. I'm a busy working professional. I like spending time with kids and family when I get home. Is there a better way, Austin? And I say, funny, you should ask. Let me show you how the auto trader does this. And I built it to work for specifically 112 trades. So how I manage 112 trades with the auto trader. This is the only thing I need to do, and then everything else is done for me. So I create the 112 auto trader. What I do is I log in, I connect my broker, I select the 112 trading strategy. In fact, I have a one-click import button that you can import my exact settings for the 112 strategy. Or if you want to trade it exactly as I do, just click the import button on my Austin's 112. I'll show you here in a second, and you can do that. Okay, so after you do that, then you set the buying power limit for the auto trader. How much money do you want it to allocate to trades, and make sure it doesn't exceed that amount. So once you do that, you are completely done. Congrats. 3 steps. You set up a 112 auto trader, done for you. And so again, what does this auto trader do? Well, the auto trader will do all the tedious work for you automatically and send you email updates. This means if you're a busy working professional, a parent, student, whatever you are, it will manage all these trades for you guys. I've had beta testers on the road going to Disneyland, going to Cabo, and they're making hundreds of dollars in the process because of the 112 strategy and turning it into an auto trader. So this is what the auto trader will do. It'll check the market every day. It will find the best time to enter the 112 for you based on the criteria that you set. It won't do anything that you don't tell it to do. Structure the trade correctly. It will submit the trade as two separate orders and then batch them together. It will manage the position based on take profit, stop loss, and everything you set. It will turn the trade into hedges if that is what you told it to do. And that's how you generate monthly income. So guys, I highly recommend that you take what you learned today and you go and execute on it now. Either using real money or paper money, go do this now. If you are someone who is busy and wants to get access to the auto trader, then you're also in the right place. So after Masterclass 3, I will show you how to access the auto trader. And the only problem is that there's 1,700 people on the wait list, and I'm only accepting 100 people for this next batch of early access. So make sure you mark your calendars for April 10th, which is Masterclass number 3. And if you want to get early access, and secure your spot. If you have any questions over what we've covered today about the 112 trading strategy, please go join my free private community on School. There should be a link below it to this button. You'll go in there, tell me because you do have to fill out questions for me to accept you. Say, hey, I'm coming from the free Masterclass training, and you'll get a direct access into the group. You'll be able to search the group for everyone else who's trading 112s. There's people trading there, posting their trades, everything like that in that group. And so again, you can find answers, things I talked about before, or if you still have a question, post a question in that group chat, and either myself or some other 112 trader in there will answer it for you. So guys, thank you so much for watching this strategy on how 11 newbie traders used a brand new strategy, the 112 strategy, to make over $12,000 in their first 30 days of learning it. So if you want to do that, go execute on this now. I gave you everything. I gave you all the instructions, all the rules, all the playbooks, everything. Now go do it. If you have a large account, go do it on MES so you can learn with a smaller account size to understand how this works. So go place it on paper trade. Do something. Start placing this trade because you will find this is one of the greatest strategies ever. Consistent, reliable, monthly income, tax advantage, everything you want, it is here for you. All right, guys, see you in the next training on how to protect your account and how to know how many hedges to have on to protect the 112 trades that you have on, and also how to convert 112 trades into hedges for free. That's right. You can have a $20,000 downside protection for free. All right, guys, see you in the next Masterclass video. Enjoy the rest of your day and your weekend.